All right. Good morning, everybody. Happy Friday. Happy Crypto Friday on the morning show. Spencer Israel, JC Parets. Steve Strazza is still off in enjoy money mode, so he'll be back on Monday. But we have a jam-packed show today, and not enough time to get to it all. So we're gonna have to run quick. All right. It's Crypto Friday, so we'll have Louis X on the show. We'll have Kenny Glick on the show. We may or may not have David Lundgren on the show. Maybe Alfonso will pop in. I don't know. It's going to be a lot. Okay. We're going to have to play it by ear. There's a lot of stocks moving this morning. A lot of earnings reports on my radar. I don't even know what's on JC's radar. So let's just go. Drop me a like, and we got to go quickly. Let's go.
All right, we are back.
Hello.
Back. You don't know what's on JC's radar?
No, your email usually arrives during the show, and I can't read your mind. I can try to guess.
I got to tell you, yesterday that meeting we had with all the analysts.
Yeah,
that was a great meeting yesterday, and Strazza missed it. Strazza's in get money mode.
That's right.
We missed Strazza in that meeting. It's nice when we get together, a bunch of traders, share ideas. I thought that was an excellent meeting. Who was MVP of that meeting?
I don't know.
I'll tell you who was MVP. It was Fonz. Fonz, MVP.
Fonz did talk more than usual, it seemed.
Was that because Strazza wasn't around, or he had more to
know.
say?
I don't know, Fonz. Is that why? Maybe.
Fonz MVP yesterday. Seriously, coming in hot.
Fonz doesn't always share his favorite charts, but when he does, he shares a lot of them.
I thought Fonz was excellent. You know who else was good? Rick was really good too.
Yeah.
Rick was really good too. I thought Fonz amazing. I got to cut it a little short today. I have a presentation that I have to give on the magazine cover indicator. This is the second one I give this week.
By the way, do you want me to? There's someone else who follows the magazine covers just like you. Do you want me to get them on the show? I've been meaning to reach out for a while.
Sure.
Yeah. Okay.
Happy to.
All right.
Happy to. Before we get into the state of the markets, I wanted to show a couple of good ones. Throw up slide 6 there, and we'll go through those really quick. I just thought this was fun. It's Crypto Friday, everybody, so let's enjoy it. This was April the 2nd of 2021. As somebody who collects these things and has been buying these things on eBay for a couple of decades now, there's quite the premium for Bitcoin magazine covers. You know that, Spencer?
That makes sense to me, because it's sort of it's like a collector thing. Crypto people are maybe more inclined to be like collectors of crypto history.
That's actually a good point, because they're collectors at the end of the day, NFTs and different tokens, community. Yeah, it's a good call.
Plus, there's probably just there's just not that many of them.
I just thought they were crazier, but you probably make a better point.
Yeah,
probably both.
Makes sense.
Probably both. So this one's actually a premium. Usually I spend like $8 on these things, $12 maybe. This one, I forget how much. I bought it a few years ago. I forget how much this cost me, but it may have been like $100 or like 80. You got to pay a premium for that.
That is a lot of money for
nice, though. Isn't it pretty? Isn't this really nice?
The cover of a magazine, but to each their own.
Well, it's not just the cover. I get the whole magazine. In fact, here it is right here.
You get the whole magazine, right? That's right.
The whole magazine.
Yeah.
So this was April of 2021. Go see what happened after that. And then here's the other one. This one came out just after that.
Where are we in the deck? Oh, there you are.
The Gov coins. The digital currencies that will transform finance. See what happened after that.
That hasn't quite worked out, I think, the way some governments thought.
It's just fun, right? It's just fun. Don't forget about when the market bottomed after this guy right here. This is one of the greatest. This is Life magazine. This
is a conveniently that chart ends at a very convenient location. That chart ends at what, in 2022, 23?
Yeah. That's when the market bottomed.
Yeah. What happened after that?
It went up. Yeah, you should see the magazine covers at the bottom there.
Okay.
Anyway, so that's what I got going on. So I got to keep it simple today. What do you say we do a little state of the markets?
Yeah.
And
All right.
dive in. All right, ladies and gentlemen, what do we have happening today? We got the Dow down 100, 25 basis points. That is 46,900 for the Dow. S&P 500 futures down 40 bips. That's 28 handles to the downside, 67.20 for the S&P. Nasdaq 100 down almost 0.2%, 25,086. That's 150 handles to the downside for the Nasdaq 100 futures. 30-year bond futures pretty much flat. It's 117. Crude oil up 0.2%, back near 60. Copper pushing up 0.5%, just under 5. Gold up 0.25%, back above $4,000 an ounce. Silver up almost a full percent, 48.40 with the VIX still above 20. Wow, VIX still above 20. Over in funny money land, Bitcoin at 100,000 even, 100,300, down almost a full percent on the day. Ethereum 32.40, 32.40 for Ethereum, down another 2% on the day. And then we got Solana 152, down about 1.7% on the day, right near those August lows. Total crypto market cap, Mr. Spencer Israel, 3.31 trillion.
Can we bring up slide 2, please? I always love looking at
Can we get a shout out for slide 2? Spencer Israel, coming in
Yeah,
hot.
So you know, Bitcoin coming in this morning. You know, you're down 1% again. Who is selling? Who is selling right now? Well, it turns out not the TradFi people. Less than $1 billion of outflows of Bitcoin ETFs during this whole drawdown that we've been in crypto. So, all you crypto maxis and whatever, don't blame the ETFs because it ain't their fault. It's everyone. It's everyone on the blockchain who's selling.
It ain't my fault. Did I do that?
Pretty remarkable stuff. I think these people who buy these ETFs, kind of like me, they buy and they hold. They really are holders. They do not sell. So I thought this was a very interesting piece of data. No, you don't agree? Who's selling? Yeah. It's not the. No,
we know who's selling. It's the short-term holders. We'll have Louis come in and talk about the short-term holders. I think it's 55 days. I think is what it is. I think it's 55 days of the short-term holders. Louis will specify, but yeah, we're seeing short-term weak hands on chain puking them out. Mm-hmm. Yeah, we have the data. We see it. So my point is this makes sense, I suppose.
Yeah. Anyway, thought that was interesting.
I like this one. Throw up the new slide 3 there. I like this one a lot. I did a picture-in-picture. I don't always do that. Not a lot of technicians do a picture-in-picture. You like how I did this?
No, it's good. Should do more of it.
You think I should do more picture-in-picture?
Yep.
All right. I think I will then. All right. I mean, Spencer, if you know what you want, if that's what you want, more picture-in-picture, you will get it.
Yeah, I'm a fan.
Nice. All right. Shout out to Spencer Israel. So here we're looking at the European bank ETF at the highest levels ever, right? So if the world's falling apart, this is probably not happening, right? This chart would probably be upside down, actually, right? So these are the new all-time highs, and I zoomed in because you got a nice little quote-unquote healthy consolidation. So, you know, if we truly are going to see, you know, breadth deterioration and weakening from important areas, this, I think, has got to be up there on the list as one of the most important parts of the market. You know, I would put this up there, Spencer, with consumer discretionary in the United States. I would put this up there with high beta versus low volatility. You know, I think strength in European banks is one of those things that you put in that category. And so it's not just that high beta has been outperforming. It's not just that consumer discretionary has been outperforming consumer staples. right? All that is indicative of healthy market environments, which obviously we've been in. I think you put this in that category. So I think, in other words, what does that mean? That means if you're buying stocks, if you're bullish, because that's historically a good idea in bull markets, you're looking for an upside resolution here. But I can tell you from experience that the most powerful signals when you see these patterns is when these patterns fail. So this is a textbook bullish continuation pattern. Textbook. So if what the textbook tells you doesn't happen and you get a downside resolution here, that's a huge signal, in my opinion. Huge signal. Bearish signal, by the way. Right? I think there's something here for everybody. What do you feel about that?
There's something here for everybody. I think that's the takeaway.
Yeah,
right?
If you're bearish, you know what to look for. If you're bullish, you know what to look for.
Yeah. I think
and if
that's
you're like me and you don't give a fuck, you're good. You're just waiting to see what happens. Right?
Those are kind of my favorite those are my favorite setups and my favorite charts. Is when there's something for everyone. Yeah. Right? Or in other words, you see what you want to see. You want to see
what you want to see.
Yeah, you see what you want to see. Right. That's great.
There are people out there like that. Right. Can you throw up? So here's the largest component. Throw out the HSBC. So HSBC is the largest component of the European Financials Index, and here's what that looks like. It's an interesting setup.
HSBC. Why is that? We've discussed this before, but why is that European again? Isn't that China?
British? It's British.
It's British?
Yeah.
What am I thinking?
Well, it's like weird, right? It's like Hong Kong.
We've discussed this before, I feel like, but yeah, I thought it was Hong Kong, but I guess I don't know. Clearly,
it's one of those weird things. Like, is Hong Kong communist?
Supposedly now it is.
So no, this is British, a hundo P.
Okay.
And it's $250 billion in market cap. So like, people forget how massive this thing is, right? For perspective, this is HSBC. What did I say? 250 billion. Let's see how close that is. I think that's a pretty close guess, actually. According to the actual data, 247. All right. So 247 billion in market capitalization for HSBC. And for perspective, Bank of America is come on, computer. Bank of America is officially, but 390. HSBC 250. Then you got Citigroup at 180.
Wait, you're talking about market cap here?
Market cap. Wells Fargo is 270. So it's about the size of Wells Fargo. It's about the size of Wells Fargo because JP Morgan's much bigger. JP Morgan's 850. That's a monster. JP Morgan's $850 billion in market cap. That's
it's huge.
Goldman's 230. So HSBC bigger than Goldman. But look at that setup. So this is a bullish setup. Let's see if it breaks out. I mean, I think that would be really constructive. It's like if you're looking for an upside resolution in European financials, confirming the health of this market, you're looking for that breakout, right? If you are bearish this market, you're looking for European banks to confirm any weakness that you've seen. A breakout here might invalidate that. Jack Dube saying, JC ignoring the stripper indicator. I got to tell you, I'm not ignoring the stripper indicator. Oh, I mean, I should say I am, but on purpose because it hasn't been working. What's the ticker symbol for the
It's Rick.
Rick, that's right.
I hate that I know that.
I love that you know that. So the stripper indicator has not been working. It used to for a while, but this day and age, you know how it is. The kids aren't drinking. They're not going out. They're not making bad decisions like many of their predecessors, right? In the old days, I'm not speaking for me, of course, but I could say that there were people who were making poor decisions going to these types of establishments. And the kids these days, they don't do that. Right?
No.
Do you want to see... Look at the Rick's Cabaret.
And then I'm bringing on Kenny.
Yeah. How appropriate. Here, throw up. There it is. You guys want to talk about it? Throw up the new slide too. So it just hasn't been working. It used to work. It used to be a pretty good indicator, for quite some time, particularly pre-COVID. There was a massive divergence in Rick's Cabaret going into COVID, giving you a heads up that something was wrong, right?
Okay.
But this indicator has been off for years, right? So I don't think that it's a function of the economy. I just think it's a function of, kids these days aren't boozing. They're not going in there, they're real friendly in here, right? Like you don't get that anymore. Boy, they're real friendly around here. Right?
Yeah. Oh, yeah.
That's what one of my buddies used to say back in the day. When you take kind of like nerdy guys into one of these establishments, they're like, whoa, they're like freaking out.
No, what we need, and I don't know if it still exists. There used to be like a Vice index, right? Of all
that has all kinds of stuff. That has consumer staples in it.
Yeah, all right, fine. This is not. This is
like straight up.
This is not a thing. This is not a thing.
It used to be a thing, dude. The divergence in this stock before COVID. I mean, it was already telling you there was a problem. But then we lost it. It's just not there anymore.
Okay.
Throw up slide 6. Bought more energy yesterday, Spencer. What do you think about that? That meeting yesterday was filled with energy.
Here's the thing about the energies. I mean, obviously, we know that Jason and Sam have been pounding the table on this for, months. I would say, right? And now, other people are starting to get into the boat with them. I'm seeing more and more energy stuff every single day, not just amongst us and amongst you guys, but just on the Twitterverse and on the internet. Just more energy talk, it seems like, than I was even a month ago.
The oil refiners index is making all-time highs, right? You know what I mean? Look at this huge base in energy. Man, I remember where I was in 2008 at that peak. It was the summer of 08. There was nothing working. By the way, for people who talk about breath deterioration, go back and study 2008. You want to talk about breath deterioration. There was nothing going up except energy and like a few ag stocks like Mosaic, Potash, and then like energy. Like that was it.
It's still commodity based. So commodities is what you're saying.
Yeah.
Yeah.
I think even some of those, the fang of their day, I think we're probably still working at that time too. Do you remember the fang of their day? They were called the Four Horsemen.
Certainly not. Oh, wait. The Four Horsemen of the biotech? That?
No, the Four Horsemen of 2007, 2008.
No, I doubt that's before my time.
So that was like the fang of its day. It was the Four Horsemen. It was Google, Amazon, Research in Motion, and Apple, I think.
That it's funny if you go look back at like CNBC clips from like that time. Research in Motion is always on there. It's always on the big board.
Research in Motion was the hottest stock. It was BlackBerry. So
I know.
BlackBerry.
It's always on the big board. Anyway, energy. Yeah, I know. We're all getting bullish now. Everyone's getting bulled up.
Well, the question that I have, and Harmander's pointing it too. My question, and I don't know the answer, but like, do we need tech to really sell off? And drag these markets further down for energy to finally break out, kind of like what we saw a few years ago? Like, is that what it's going to take, or can energy go up and the market can remain, healthy and stable?
What if tech does sell off under the surface, but like the megas keep doing what they're doing, and then you get this bifurcation?
I mean, some of the megas have been selling off. I mean, Microsoft is off hard. Meta is off hard. Like, not everything is Google and Tesla where it's like all, rosy, Apple, it's Apple, Tesla, but Meta and Microsoft have been getting the shit kicked out of it, in that mega cap growth area.
Yeah.
So there's some selling in those big areas.
That's true. I don't think has Meta had one update since its earnings report. I think maybe one.
Yeah, I got a good one here.
All right, and then we got to bring Kenny out.
Then we'll bring in Kenny. Yeah. Perfect. Yeah, but one more and we'll bring in Kenny. So this one coming in from Edward.
Oh yeah,
coming in hot.
This is the back row. This is the end of the meeting here. Yeah,
dude, Edward, what a value add, right? What a value add. This thing's up another 7.5% this morning. One for the good guys. So look at this breakout. So, huge shakeout. I was thinking about buying this last week. Then it sold off, so I was happy I didn't. And then yesterday, what a ripper. So something happened, like, I'm not going to pretend to know, but something along the lines of they had some robot thing, because they make robots, not just cars. They have some robot thing, and then people thought that there was like a human inside, and then they opened it up and saw that there wasn't a human inside, so the stock started ripping, something like that. This thing looks great.
Look, there's three Chinese EV stocks, four, right? There's this one, there's Neo, there's Build Your Dreams, and there's Li, Li. And of those four, well, Build Your Dreams is OTC, right? But I think this one looks the best.
Looks great. I'm in it and ripping this morning, so let's go. How do you feel about, you got investors, especially these American ones? You know how these American investors can be. Well, like, JC, nobody cares about your Chinese EV stocks, bro. Here in America, we trade large cap tech stocks.
These are junky, man. People care about that. People care about the junk for sure.
So you think this is cool? This isn't JC coming out of left field?
No. People like this stuff.
Because you're a man of the people, Spencer. So
people like this stuff. People like the EVs. Yeah,
this fits. This is okay.
The power of the EV overcomes the randomness of China.
What about the power of China?
Well,
China looks great, dude.
Okay.
China just closed a new 10-year highs.
Yeah. All right, Kenny, come on out. Let's do this.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I'm still kept it 100. Hola. Yeah.
What's
Kenny
up,
Glick in the house.
What's up? Talking about the Four Horsemen depends on what year you're talking about. Originally, it was Intel, Microsoft, and Cisco and Dell. Dell was the king of the world for a while there. But Research in Motion, yeah. But it was BlackBerry back in the old days. Remember those days?
Kenny Glick, showing his age.
Yes.
Kenny Glick, the Benjamin Button of day trading here.
Yeah, that's true.
How old are you now? Like 80? How old are you?
I'm actually 112. Yes. I've lived.
Well, you look great.
I've been resurrected many times, and my bearishness has been resurrected. Thank you very much. If you guys were with us yesterday morning, I was pretty damn clear. I'm shorting the Qs, and that was at 624, and was still short because it's my time, baby. I called the top in the metals. I called the top in the nuclear stocks. I called the top in the rigatonis and all that other bullshit, and it was just. You're sending in the Irish first. The pawns and the knights have to be massacred, and then they come for the king in the back. So they're finally coming for the king. We'll see. Let's see if the ground just gives way today. I hope it does, but keep an eye on UVXY.
I hate how people always hate. I mean, you're not hating on the Irish. You're just calling it like it is.
Oh, it's Braveheart.
I know. It's just such a bummer that the Irish getting so much hate. You used to call them donkeys, right? Because you can get an Irishman cheaper than a donkey, right?
I'll stop this conversation right now.
No. Like that. I love Ireland so much. And I feel like I'm part of that community, even though I couldn't be further away, as Cuban. I couldn't be more opposite than the Irish, but I just feel so part of that community. I just hate it when they hate on the Irish.
Right. Hey, speaking of communities, how's the open door community working out for them today? Hey, let's give it up.
Look, man, you gotta. If you want to play meme ball, you gotta stomach some mean drawdowns.
How bad is it right now?
It's not bad at all. It's just right back to $5. It's already been a buy.
Down 21%.
Yeah.
So they came out with earnings yesterday.
Yeah. Or again, and that's what's so sick. Somebody reads that story and it says this is the worst thing I've ever read. One guy says, "Nah, this is super bullish." I don't care. I mean, for me, that stock was the beginning of 2025 where we were catching these. This was one of the OG Andy Dufresne's. I mean, we had this bad boy coming out of that.
Show me I love a good OG
Andy Dufresne. So yeah, if you guys don't know, and again, I shout out to Strazza also. About a year ago, we went through this list of stocks that were just going sideways and trying to come out of these awful freaking down patterns. And that sideways motion, when they come out and then they break, this is a 5-year VWAP break. The other chart was a 3-year. When they come out of these monster downtrends, this was the theme of 2025. And I don't know what they wanted here. The stock went from 50 cents to $12, basically. What more do you want? Not every stock's going to go 20,000x. So again, now it's right back to that 495 area, which is the 5-year VWAP. I just bought a little bit because now, you're talking about, we're going right back to the 1 minute. First VWAP break of the day. Here's your faux show, bro. VWAP break. Party's starting in my house. Let's go. So, I mean, this market.
There's a lot of potential upside here. It doesn't mean it's going to go kiss that, but it could.
Right. I'm thinking we could get, if we get the 530, we get the 550. And again, because it's Friday, if we can get over that half number, you'll start triggering those half number increment options, 550s. But again, this is just a payday already. I'd be selling a little bit now, looking for the 32 and possibly the 50. But man, this is the great, like I said, this is the greatest trading market I've ever seen. And, if we get a little bit more hammered, even better, because when we turn, if anybody thinks we've seen the high of the year, you're probably wrong. I mean, every time I think there's a top, even a short-term top, you're punished for even thinking that. But right now, living in the moment, I have no stocks, sold the SRAD, sold the Clove, sold everything I own. I didn't have much, but now I'm completely liquid and loving it, and I'm not coming back. I'm not coming back. Yesterday, these last 2 weeks have been the greatest trading ever, and it's because I'm free, because I could just look at the market for what it is. I just want to trade for the day. We've got a trade that works every time it shows up, and we're going to stick to it, and that's what we're doing, and I'm not straying from the path. So I say now until the next time. But I'm on a nice little path. We're on a good run right now. This trade continues to show up. And again, just like this, for the lowly day trader, right? You got a $4 stock or $5 stock in this case, breaking 5, and you get your 20 or 30 cents out of it. You got your 3,000 shares. This is a 9-minute trade. Just think of what we're doing here. You're making more than a normal, well, I don't know, depending on who you are. People who are just going to work and struggling and not even at work yet, and we're already done with our day. This is real money, friends. If you're making $300, $400 in 5 minutes, that's your day. I mean, this is a job. So when you have that pay,
make a day's pay.
Yeah, make a day's pay and go away. So we could start the weekend right now, but I'm riveted by this market. And if we give way, let me just show you those QQQ levels. This is the Q from yesterday. So we are in a wonderful downtrend finally, and it all started with yesterday's show, and so here's the market in a nutshell. Here's 20 days. This takes in basically everything from that last kind of that one moment where Trump tried to crash the market and then what he cared. So now that is telling us that we're below the VWAP that incorporated that move. So that's super bearish right now. So if we're below that 614, we got some room to go down. And again, I'm not looking for a major move, but let's go test that midpoint, which is around 602. And, and it's only 6 points from here. But if we break 602, friends, so
can you zoom into that intraday?
Yeah, well, actually, I want to show it to you even better. Watch this. This is a 30-day, but it grabs intraday activity. That's why it's important, because that big sell-off that we had, a lot of it was aftermarket. So this takes it into consideration. But let me show you the real one I love very much right now. It's a 3-month VWAP. So it's a nice clean idea right here. It takes in everything that we've seen. There's that big attempt to sell off, and then we rallied and broke through there. I just think this market is going to do exactly what Oracle did. Oracle had that monstrous move, and it gave the whole move back. Palantir, same thing. So I'm just thinking the Qs could come back and just get rid of that froth, consolidate down here to 595, and I think we get the 595 today. If we do sell off and the UVXY is telling us that we should stay short, I'm thinking it could be a nice catastrophe, because nobody likes selling on Fridays. Everybody thinks it's going to get worse over the weekend. So, I'm just really, really riveted to the Qs again today. But, open's going to be a lot of fun. It's going to be a lot of fun today. And if it rolls over and dies, once the volume dries up on the stock, you're probably headed back to 250. I mean, it's garbage. They tried so hard. I never seen a concerted effort to try to push the stock when it had already run. I mean, it was like they were just trying to create new bag holders in the name. So I don't know. I think it's going to be fun to trade as always, but I'm not going to own it. No, never again.
All right, Kenny, before we let you go, want to remind everyone, or tell you, maybe announce, not remind, but Kenny's doing an open house as he's going to start it in the back half of next week. I think the first day of the open house is Thursday, right?
Oh, we're not doing all week?
Doesn't it start on on Thursday and runs the whole. I think it runs Thursday, then the whole following week. Right?
Oh, okay.
Is what I thought.
Into the class. All right, cool.
Right,
I like that.
right, exactly. So I just dropped a link in the chat. Basically starting on Thursday, and then running through the whole week thereafter. Kenny's room will be free, but only from 9:30 to 11:30. So
which is really a great time to be with us. Yeah, most of the
I would encourage everybody to go in there, join Kenny, put on a trade, right? Like go, and when Kenny puts on a trade, put one on too. See what it feels like. Just see how it feels.
Yes. See what it feels to be liquid and loving it. It's a great feeling.
I love the alliteration.
Thank you very much. You have a great weekend now. Be careful out there. I think we're going to get slammed. But again, UVXY is the takeaway. UVXY is above 12. This market's getting hammered. UVXY under 1070. Nothing's changed. Bull market's back. Be careful.
Right. Love that. You know, I like how he sets the levels. He makes the plan, right? Because he doesn't know what the market's going to do, right? He doesn't know. Spencer doesn't know. I don't know. David Lundgren doesn't know. Smart man.
I don't know. He might know.
He might know a little bit, actually. Yeah.
Should we find out?
Yeah, let's do it.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. David Lundgren, how are you, sir?
Excellent, JC. How are you doing?
You know, I honestly couldn't be better. And I want the audience to know as well what a treat this is to have Mr. David Lundgren here, one of the best in the business.
You're too kind.
No bullshit. You're good. You know, and guys, seriously, I don't just throw this around. David, seriously, one of the best in the business, no question.
Thank you.
So no more messing around. Let's get right into it. I'm told the market's going to crash. Upcoming debt crisis, according to the economists. I mean, it's practically a guaranteed market crash, I'm being told. Do you see the same thing as all these people or no?
Well, I mean, I think the idea that you would forecast that the market's going to crash is kind of like, obviously it's going to. It's just a matter of when, because it does do that. The question is, when is it going to happen, and are the ingredients in place for it to happen? And you know, there are a lot of things that are happening today that are very, very emblematic of those conditions that precede a pretty bad decline. You go back in history, all those conditions are in place today. But today, you know, there's this big conversation about whether or not we're in a bubble. And I think today you're one of three people. You've either been through a bubble before and you're calling it out for exactly that. And then within that category, there's actually two different people, which we can talk about as well. You've been through a bubble and you know it's a bubble, but you're telling everybody it's not a bubble. And then you've never been through a bubble before and you are like a deer in headlights and you have no idea what to do. You've got all these professionals saying it is and it isn't a bubble and you have no idea what to do. So I think you're one of those three people, not you, JC, but investors by and large. Myself personally, I've studied bubbles all the way back to the early 1900s, and I've managed through the dot-com bubble, the GFC, COVID, what we're in right now. And I know, at least based on the data that I have both experienced and studied, both as a portfolio manager and as a research professional, it's a bubble. And we should talk a lot more about that. And I think last time I was on, I said it was a bubble, and that's the point, right? And that's a very important point. We should talk about it.
I'm happy to hear you say that. I love bubbles, so I am.
Exactly. So let me get to that.
I'm so happy to hear. I mean, I'm seeing things that, you know, when I look at Europe and it did nothing for a couple of decades, and I see emerging markets did nothing forever. You know, I see China did nothing forever. You know, it's hard for me to call it a bubble now. My suspicion is your bubble, the fact that we're in a bubble is other things. And I'm hoping you're right. Bubbles are great time to make money. So let's hear it.
Yeah, but in that category of people who are willing to say that it's a bubble, who know it's a bubble, and then from there, you're one or two people. You either say it is or you say it isn't. The ones that say it is a bubble are either engaging with it because they know that you should engage with it because you can make a lot of money, which I think is what I said last time I was on. I think the title of the show was "Embrace the Bubble" or something. Or you know it's a bubble and you know what the aftermath is and you refuse to engage in it. And those people pretty much are more like fundamentally oriented and they just don't have a way to manage risk through the cycle. So for me, obviously, I do pay attention a lot to fundamentals, but I'm predominantly technical, so I can manage risk very well. So I'm fully engaged in the bubble, sometimes like egregiously so. But I believe that's what it is. And my
Like
point,
the old saying, if you see a bubble, go run and buy it as fast as you can, or something like that.
yeah, run. Yeah, the last video for my research last month was, yes, it's a bubble, and that's a good thing. But
Yeah.
that's something I've been saying for a while. And
Well, tell me why. Why do you think it's a bubble? I mean, I'm rooting for you here, selfishly.
well, I'll tell you what I'll answer that question, but I will also say that it actually doesn't matter, even if it is or isn't. I'm going to
That's kind of where I fall too.
if you convince me by the end of this conversation, and I think you know me, JC, I'm open-minded. I'm just data-driven, open-minded, right? If you can convince me by the end of this conversation that it's not a bubble, what am I going to do in my holdings? Nothing. I'm going to hold the same exact stocks, and I'm going to be short the same exact stocks, and that's it. And so it doesn't really matter. This is all kind of like conversation that doesn't really. This is the way it should be. Conversations really shouldn't affect how you're positioned in your portfolio. The data should, and so the data is going to be what it is at the end of this conversation, and that's what I'm mapped to is the data. But I think one of the reasons why folks are having such a hard time calling this a bubble is because they say things like, how can this be a bubble? You know what bubbles look like. It's sockpuppets.com, NVIDIA, Palantir, Microsoft, Amazon. Those are very established, dominant companies that are ruling the world. That's not a bubble. There's two things to say about that. Number one is bubbles unfold in two phases. The first phase is what I refer to as the fundamental phase. And that phase of the bubble takes years to play out. And it basically starts when people wake up and go, wait, what? What's this internet thing? What's that? Holy cow, that's going to change the world. What stocks can I buy to embrace that trend? So you go right to what's already out there. Cisco, IBM, Oracle, Microsoft. This is the 99 bubble, right? That started in 96, 97, 98. So it took years for it to play out. If you remember when Alan Greenspan called it irrationally exuberant, when was that?
95?
96.
96.
What happened after he said it? First of all, why did he say it?
You were around, I wasn't, David, so fill me in.
If you look at the chart, he was 100% justified in saying it. The market was as overvalued as it had ever been in history. He was 100% justified. What did the market do from there? It doubled. And valuations went up 60%. So that's the nature of a fundamental the fundamental phase of a bubble. The key thing in a fundamental phase is you're taking valuation risk. You're not taking business risk, because Cisco fully participated in that bubble. It's still around because the company was excellent. The
25-year highs, Cisco.
What's that?
Making 25-year highs as we speak.
Finally, right?
Finally.
Right. So the idea though is that during that phase of the bubble, it's hard. In fact, I remember back then, people were having a hard time calling it a bubble because it's Cisco, it's IBM, it's Microsoft. These aren't bubble stocks. But at the end of the bubble, once people start to get really comfortable with the idea that this is going to change the world, and we start getting these, it's a $5 trillion impact on GDP, and it's going to happen in the next 2 years, and all that stuff, people start then piling into companies that are not established, don't have earnings, probably don't even have revenues, right? And so that's the hype phase of the bubble, and that's the part of the bubble that we can all freely say, yeah, that's a bubble, because it's
and then that's, correct me if I'm wrong, but that's like 99, while transports had already rolled over and all these stocks had rolled over, and market breadth was a disaster, and there was a few of these garbage stocks. Like, is that what you're kind of?
That's right. So remember, the bubble started in 96, 1998. The long-term capital management was a big shock against it. After that shock and the liquidity injections happened, that's when the hype phase of the bubble started, but it really started to accelerate in the latter part of 99. And Cisco did fine, but it started to massively underperform. If you look at a relative performance chart of large caps versus small caps, it peaked in like September of 1999, because we started to get more and more confident. We started buying these companies that had no earnings, no revenues, management wasn't established. It's a brand new company. It just put .com after its name, all that stuff, right? So that's what I think is happening now. And I think we're kind of like, so we're transitioning from the fundamental phase of the bubble. And the reason it was a bubble is because Palantir is trading at north of 100 times revenues. Cisco was trading at 50 times. I mean, NVIDIA was trading at 50 times revenues at its peak. So those are all, that's symptomatic and emblematic of the fundamental phase of a bubble.
So David, was this spring long-term capital management of this cycle?
No, I actually think 2022 was.
Got it.
Right. So think about this. In 1998, after that happened, most stocks did not recover that 1998 peak until well after the bubble was over. That's the magnitude of breadth divergence that took place then. That same thing, only I would say worse, is happening right now. Most stocks have not exceeded their 2021 peak. 2022, depending on when the stock peaked. So we've got a massive divergence. Now that's all like I think one of the mistakes we make as technicians is we observe divergences, whether it's breadth, momentum, whatever other ways you can measure divergences, and we observe them, we can see them, and we act on them. And what we fail to remember is that divergences to a technician are like valuation to a fundamental manager. You can observe that Palantir is expensive at 60 times revenues, but if you acted on it, it's now at 125 times much higher revenues. So valuation is important to know. It puts a lot of context around what's happening, but you can't act on it. And I think divergences are the same way. It describes the environment we're in, but you have to, at the end of the day, do what's actually happening beneath the surface. And today, it's not like, if you look at the edge of my positions right now, which is, the edge, the calculation of edge, which is how often you're right times how much you make when you're right minus how often you're wrong times how much you lose when you're wrong. That in a bull market, that edge number should be big, right? If you're doing your job and just listening to the market and whatever. In a bear market, your short edge should be big. Today, I have positive edge in both. That's
is that evidence of dispersion?
What's that?
Is that evidence of dispersion?
100%. And if we were in the bull market that the S&P is trying to get us to think we're in, that wouldn't be possible. So it's like your point with JC earlier is like, if it's a bubble, embrace it, right? So that means two things though. That means embrace the leadership, but it also means you should also be short the stuff that's not participating. I mean, I can mention two names because we recently covered them, and so therefore I'm not in it anymore, and I don't plan to be in them again. But things like FactSet, absolutely cratering. Duolingo, absolutely cratering. Those are the setups they're all over the place. And so the hedge fund portion of the book I manage is roughly equal between longs and shorts. And if the market was truly in a bull market, I wouldn't have a single short position on. Because the way I structure the fund is that if we're in a bull market, if like the risk gauge that I use to measure the environment, if that's in risk on, I have zero short exposure on, because I don't short to
and vice versa too.
Yeah, I could be 0% long, 20% short.
And you're looking at other asset classes and stuff too?
Yeah.
Precious metals, bonds, things like that.
Yeah.
Where does all that fit into the current picture?
It's kind of a mess. To me, bonds, I just think they're range bound between 3.5%.
100%. Yep.
And I think that is also feeds into the environment that we're in. So the reason, not I want to say the reason, but it shouldn't be surprising that we are at extremely high valuations right now at the equity market, because when you look through history, when the 10-year note is between 3.5% to 5%, guess what? That's when you get the highest valuation in stocks. And it's when you start to move out of that range, either above it or below it, that valuations begin to compress. So that we are, from an interest rate perspective, right in the happy zone for valuations. That's why valuations where they are. And so everybody's like really championing this idea that the 10-year treasury is going to go lower. I'm good with that as long as we stay above 3.5%, because once we go below 3.5%, you now get into the realm of why are rates going below 3.5%, right? And so now valuations compress. So that's where we are. So we're kind of walking this fine line. And if you ask me like how this whole thing, again, this is not going to change how I position unless you change my mind at the end of this conversation. But what I think is we have entered the hype phase of the bubble, and it's going to last as long as the Fed is cutting rates. And as soon as the Fed stops cutting rates, that all inflects the other way, and it all comes unglued.
And by the time the Fed actually does start cutting rates, we'll have already seen the turn, because the market sniffs that out.
Yeah, there's a very good chance of that.
right? You're looking at the Fed fund futures, right? And the Fed does what the bond market tells it to do, not the other way around, kind of.
Yeah, for sure.
Right.
We can look at that chart. That's a certain a definite case for why we don't need a Fed.
That's hilarious, number one. And number two, people are always asking me what direction interest rates are going, like what the Fed's going to do. It's like, well, why don't you just look at the Fed fund futures? What the fuck do I know? Like, you could sit there watching television all day, listening to these boring speeches. I don't know if you listen to them, but like me, like I can't listen to this guy.
Yeah.
First of all, it's super boring. Second of all, I don't understand half the shit he's talking about. So, like, what am I doing? Like, I got better things to do.
Well, the other question is, why would you listen to him? I mean, he's the one who said that inflation is transitory. So he's the most connected financial professional probably on the planet. He talks to anybody. Jamie Dimon could be in the middle of a board meeting, and if he calls him on the phone, Jamie will get up and take the call. I'm being a little facetious, but that's how connected.
I mean, that's probably right.
Particularly if it's a crisis moment. So he's got more data, more smart people on his team than anybody, and inflation was transitory.
Yeah.
And that's not a dig against him. But it's also why I don't make those forecasts, because if he can't do it, and he's way smarter than I am, and he has way better information and contacts than I do, and he still gets it wrong, what right do I have trying to make those calls?
Let me ask you something, David. How do you the U.S. is half the stock market in the world, right? So that leaves another half of us, a lot of stocks in a lot of countries, and most of those are not, dominated by mega cap tech like the United States. So you're getting a lot of other information, a lot more cyclicals in a lot of these other areas. France, for example, looks great. London, new all-time highs. Latin America, new multi-year highs. China, new 10-year highs. Japan finally exceeding those 1989 highs, right? And going on to make new all-time highs. Like, maybe that one's a little stretched, fine, whatever. But some of these look like they're just getting going. Europe did nothing. The Euro Stock 600 did nothing for 2 decades.
Yeah.
Just now breaking out to new all-time highs. So like that, I'm rooting for you. I hope we are in a bubble. I hope you're right. But the international stuff is what gives me pause to that, right?
Yeah.
Like, can a bubble be in this one area of specific types of stocks and the rest of the world is great? Like, I just don't see that as part of the bubble. You tell me. But
no.
The international is what gives me pause.
I totally 100% agree with you. But I guess everybody today is a liquidity expert, which always gives me pause to them.
I don't know anything about this stuff.
I know, but everybody seems like they are. Like Michael Howell is the liquidity expert, and he's been doing it for decades.
I don't even know who that guy is.
You should have him on your podcast, on your show. He's excellent.
Spencer, get him on, this Michael Howell guy.
Yeah, no, I've never met him, but I've been getting his research for a long time.
Right.
And but my point though is that everybody is a liquidity expert, so which kind of makes me think that maybe liquidity is not going to be the problem the next time, because everybody's looking at it, right? But my point is that it's hard for me to like disengage from the notion that liquidity matters. So I am again, once again, as always, being a little facetious. But when liquidity inflects the other way, and it does cycle, and Michael Howell does a great job of pointing this out, when it does inflect negative, it's going to be extremely consequential to U.S. equities. To your point, JC, right? Because it's so extended in valuation, and we can go on and on. It's all the other backdrop elements behind that are in place for a dire outcome. If that's right, and it does roll over, the idea is that when you go into a bear market, everything goes down, because correlations go to 1, and if it's correlations go to like 0.7, 0.8 in the bear market.
We've seen it. We've lived through these.
I know.
I mean, right?
Right. But here's the point: when the U.S. market goes into a bear market, everything will go down, including the great-looking charts, because it's about liquidity. It's not about fundamentals, right?
European banks aren't breaking out to all-time highs, in other words.
Yeah, exactly. But here's the thing: as we go through that bear market, which could be a cyclical bear market like 2022, or it could be a crisis bear market like the GFC and others. As we do that, what would traditionally participate fully and almost lead on the downside in that environment, whatever in that environment doesn't do that should be doing that. That's leadership for the next bull cycle.
100%.
Right? So therefore, there's nothing that European stocks can do to stop themselves from going down when it's a liquidity event, and particularly if it's a crisis bear market, everything's going down. Just to give you an example, what did gold do during the global financial crisis?
Went down.
It went down. Why? Why did it go down?
It's a source of funds.
because you had to sell what you could, not what you wanted to. Right. So that's what we mean when we say correlations go to 1. Everything does the same thing because it's driven by liquidity. What does that mean? It means that
the dollar was also ripping face.
Yeah.
That didn't help.
No. But everything goes down. Right. So that means all the good charts, all the things that have good fundamentals, it doesn't matter in a liquidity moment. Right. So as we go through that cycle, if Europe outperforms and if Japan outperforms and if commodities outperform and emerging markets, et cetera, then when we're through this cycle, that's what's going to lead. And if you ask me, that's exactly what's going to happen. I would think.
Yeah, you think that in the next bear market, international outperforms and then leads on the way out.
Right.
Yeah. No, yeah. I have a hard time disagreeing with you on that at all.
And I think a lot of people are surprised to know that Europe started to outperform before the peak in the 99 bubble.
That is interesting.
So it's happening again. So if the U.S. market is like, if you rank it according to relative to other markets around the world, it's one of the best performing markets. If you do that
not this year,
no, for sure, no. But if I'm talking just over since the 22 bottom, if you do that same analysis, equal weighted, and you have 50 countries that are like you should be tracking because of liquidity, the rest of them are too small or don't have enough stocks or whatever. But so there's 50 of them. The U.S. ranks number 44.
Yeah, because you're eliminating the dominance of technology that has been a leader, and those other countries don't have that. They have industrials, and they dig holes in the ground, look for rocks and stuff like that. Yeah.
But the U.S. is at the bottom.
Yeah,
equally weighted. That's like what? But that's the truth. So that's all I'm trying to do is look at the data with as open a mind as possible, and just look for truth, not for what I want to see. And when you do that, it's like I just feel like we are in a bubble. I think it's almost like obvious. And so from there, you do one of two things: you run away from it or you embrace it. If you embrace it, what does that mean? You buy leadership, which is I call them new era industries. So I created a bunch of industries to help track this, and it's all the things that you would imagine. But you should also be short if you short, and you manage risk accordingly.
What do you make of the consumer staples continuing to make new all-time lows there relative to S&Ps? You and I have seen these things underperforming in healthy markets forever and outperforming in less healthy markets, right?
Yeah.
That to me is up there on the big signals. When I'm thinking risk on, risk off overall, like how should I be allocating my time, looking for rotation, looking for stocks to buy, or spending more time looking for stocks to sell. When I see this kind of rotation coming in again and again and again, and that to me is bullish rotation out of staples, right? Is this time different, David?
No, it's just not ready. Like when I said earlier that if this is going to play out as I think the data suggests it will, then that means we're going to be in this environment, meaning which would include potentially the S&P continuing to new highs. Until the Fed is done cutting rates, which is, let's call it, who knows, let's call it 6 months, sometime in 2026. Until then, but probably not into the peak, but sometime before the peak, you'll start to see staples turn up before the market actually peaks.
Are you saying the Fed is going to pull the plug on the liquidity right around a midterm election year where stocks tend to do pretty poorly? Is it that easy? Is it that clean, David?
Like I said, I picked 6 months out of the air. I just think that
would be awfully coincident if that 6 months is so. I mean, it would be pretty accurate from a seasonal perspective.
It would be, and there might be some hidden agenda.
Just a coincidence, David. Just a coincidence.
Maybe.
All right. We got basically 3 months till February the 1st. Best sector in the United States between now and February the 1st, knowing full well you don't know, neither do I, nobody else does. We're having fun. Best sector between now and Feb 1.
Tech. I'll tell you what I'm long. I'm long tech, industrials, and consumer.
Consumer discretionary.
Yeah, but specific, obviously, like not home builders.
Okay.
Yeah,
Tesla.
and like I've remapped the there's basically 3,000 stocks that I follow, and I've remapped them to my own liking because I just think the S&P GICS mapping is just wrong or lazy, or there's a lot changing in the world.
We agree.
Yeah, I'm sure you've done the same work, And so I've created my own sectors and industries. So I actually don't follow it from the sector level. I follow it from a group level, and I have 29 groups. And
I love that.
Like clean energy is a group that should be a leader. Capital goods is a group that should be a leader. But in there,
it is.
Yeah, exactly. Just so going forward, like the crypto industry is an industry within the capital markets group. I think that's going to continue to lead.
It's almost like you knew what was coming. Look at these guys. Look at these guys.
Yeah.
So these are back in 21, right at the top. You know,
I
part
love
of the
it.
collection. No, it's great. I wanted to. I'm glad you brought that up because what do you think? We'll finish. We got to give the kids what they want. It's Crypto Friday around here on the morning show. Bitcoin, 200, 50, 0, a million. Where are we going?
I think there's probably another 5% or so on the downside. I think the peaking Bitcoin was pretty well broadcast by the peak in MicroStrategy.
MicroStrategy started to underperform IBIT the day that options trading started on IBIT.
No kidding. No kidding.
The day.
That market is so
Does that make sense?
Yeah. Yeah.
It's no longer necessary. Thanks for coming. See ya. Right?
Yeah.
I mean, just classic, right?
Yeah.
All right. So you think maybe 5% of downside and then what? 150?
I'm not targets guy, but I'm like I'm of the mind that this next oversold condition you want to be buying. And then here's how I frame it. Here's how I think about it for the portfolio, but here's how I frame it to the research clients. The next oversold, and I try not to think about it beyond this because I don't think you have to. The next oversold, given conditions preceding the impending oversold condition, those conditions were good. Therefore, this next oversold condition, you want to be buying it, no matter what. Depending on how much damage is done during the oversold condition as it builds, determines what you want to do with the next overbought condition. If you don't do any damage, hold what you bought. If you do a bunch of damage, either in what you own, you get stopped out and you sell it, or in other stuff that you don't own, that's key leadership that actually breaks trend, the next overbought condition, you want to be selling it. And adding to your short exposure. So I don't know.
I got to tell you, David, number one, you are the man. I told everybody when you got here, you're the man, and you obviously proved that. You know what else is funny? Your Massachusetts accent comes out more when you get all excited talking about the market. When you're like, we're just kind of whispering to each other in the back of a conference or something like that, it doesn't really come out. But when you get all fired up about the market, that Massachusetts, that's really coming out.
More specifically, Boston.
Yeah, right. Yeah.
I'm not from Southie, but might as well be.
Dude, I love every second of it. Yeah, for sure. David Lundgren, ladies and gentlemen, one of the best in the business. You are the man. Thank you so much for being here.
Thanks for having me on, JC.
Adios.
See ya.
David Lundgren. Dude, come on. He's the man.
Awesome. Yeah.
Totally the man. I'm gonna split myself. I got a lot of work to do. I got trades to put on. There are opportunities out there. I will leave it at that. Louis in the house behind the scenes, right?
Louis is here, and
Amazing.
It's Crypto Friday, so we got to talk to him. It's
amazing. All right, guys.
I don't make the rules.
Adios.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Louis,
Spencer.
what time?
How's it going? It's 3 a.m. It caught me a little bit off guard, daylight savings. It seems to get later and later, heading into summer.
Or earlier and earlier, depending on your point of view. So,
yeah.
First off, were you listening to David just then, and do you agree or disagree with what he was saying?
I mean, I don't necessarily disagree with the sentiment. I like where he's coming from, where you have Bitcoin breaking down, Ethereum breaking down, so a little bit more downside. But I think ultimately, October the 10th, that was the peak in selling across the crypto ecosystem. So I wouldn't be surprised to see a little bit more downside, get that oversold reading, really flush and purge people out, and then have a ripper after that. Because I tend to agree that we're entering into the later stages of this bull market, and that's precisely when the speculation really begins taking off. And so I think that's it's a great observation by him.
But what do you want to own within crypto? You trying to own Bitcoin assuming you're right now? You trying to own Bitcoin? You're trying to go down and get junky or what?
I've been thinking a lot about this, Spencer, and I want you to pull up one of the graphics that I sent you guys in the deck. It's the blue graphic. And you can probably see some scribbles in the back there with my whiteboard. And the basic premise is that 99% of this crypto space has basically been exposed as worthless on October the 10th. But then the next 1% is likely to redefine the next generation of technology and finance. And so I think if you compare this crypto cycle to 2021, there are so many more investable opportunities at this cycle, which I think dilutes the amount of limited capital there is to go around. Not to mention the fact that there are more speculative opportunities elsewhere with quantum, with AI, with all these ARK stocks, with what's happening in China. And so I think ultimately it's going to be paying to be more selective in crypto. And I think generally speaking, there's a lot of stuff here that is junk, that is worthless. So I don't think you're going to see that same absolute crazy altcoin season. I think it's going to be more isolated to the pockets of the market that is actually solving genuine problems. And you're already beginning to see that. You're already seeing a lot of these dead sectors just beginning to bleed lower. And then the stuff that is getting real adoption is actually managing to hold in there really well. And we know, Spencer, from relative strength, if it's showing relative strength when the market's looking like this, when the market ultimately gets back on its legs, then that's generally the stuff that tends to take off the most.
So you're actually feeling good about this right now. It sounds like you're feeling maybe better than most.
Yeah, I mean, look, don't get me wrong. I'm a trend follower at heart. So Bitcoin is breaking down, Ethereum, Solana breaking down. I need to see those breakdowns reverse. But I think ultimately that's what will happen. I think there's going to be this big shake and bake. Now, obviously, it's a bit concerning. The longer it takes, the more concerning it becomes, and so that's why it's just this caveat that you want to see Bitcoin reclaim that 105, 107 support, and until it does, just taking the foot off the gas and just letting these things actually prove themselves, I think is probably the best approach. David and I seem to have a little bit of a different approach in that sense, where he's saying the next overbought reading you want to be buying. I'm a little bit of a different mindset. I want to wait for the trend to ultimately reverse back higher, and for Bitcoin to reverse this.
So you are in do research mode, is what it sounds like. You are in, because you've been talking about sort of what are these cryptos that are not worthless, that are actually going to benefit from from the next cycle the most, and you've been talking a lot about real world use cases, and I'm sure there's more there. So that's what you essentially you are putting together your shopping list, right? It sounds like that's what you're doing, at least.
Yeah, exactly.
Okay, so doing what pretty much everyone should be doing during a correction in whatever asset class that they are in is and what I should have done, I think, back in 2022 when everything in the code bubble came crashing down, and all my fun ARK stocks gave up all their gains. I should have been putting together a shopping list, right? I should have been figuring out, and that's what people like Steve were doing, and it worked out a lot for him. Didn't work out as well for me. So when he's putting together his list right now, I imagine you have a pretty. Is there like a wide dispersion on this list in terms of like market cap, or are the things that you're looking to buy pretty concentrated?
No, I mean, look, all I care about is that I'm really starting to dive deeper into the stories, into the narratives of these things, wanting to make sure that there's actually some real adoption there, looking on the blockchain, making sure that these things have got real demand. So even this weekend, I'm looking forward. I'm going to go hiking. I'm going to bring some crypto white papers with me while I go hiking, and just do some reading, do some research, and into a few different tokens and protocols that I'm really interested in. And so it's doing the work right now, just to really set the groundwork, because again, you want to be putting that shopping list together, and I think now is the time to be a bit more selective in how we're approaching our crypto investing. And I think this cycle has only just proven that, where a lot of these altcoins have really underperformed, and I think that's ultimately due to the fact that there's just limited capital and the market is so diluted now. There's literally hundreds, if not thousands, of investable options in the crypto market. It's significantly more than the last cycle. And so I think ultimately it's going to pay to be more selective.
That's an interesting point. Can you maybe talk about not zooming out per se, but having multiple time horizons and focusing on one more than another in certain periods of the market. So for example, right now I would imagine you're probably not doing a ton of like tactical trading, short-term trading, right? But you would, right, in like a raging bull market. Is that fair to say?
Yeah, exactly. And so
Right,
you want to be making hay while the sun's shining.
right. So now you're zooming out and you're looking more for the longer term plays. Talking about time horizons of several years, right? So just kind of talk about that time horizon pivot and how you juggle them both.
Yeah, it's a really good question because again, if you're just in here to make money, we're all here to make money. And if you're just trading the short term, you don't care about any of this stuff. You don't care about what these technologies are doing. You're just here to make money, participate off these trends. And we're looking at the charts, and that is our bread and butter. We're looking at the strongest charts, the charts that are set up the best, and we want to be participating in those. Now, if you've got a little bit of a longer time horizon, I think it makes sense just to do a little bit of work because particularly in crypto, you don't know what you're trading. It could just be air. It could be a fugazi. And particularly with everything that's happened since October the 10th, it's clearly been revealed that that's almost the case. And so I think it makes sense that if you're a crypto investor, if you've got a longer time horizon and you're not just trading these as setups, I think it makes sense to do a little bit more work just to make sure that the thing that you're investing in is not complete air.
So forgive me if I'm putting words in your mouth, but it seems a little bit almost like you, as someone who takes this stuff incredibly seriously, you almost like these washout periods. Maybe you not almost, maybe you just straight up do like it because it gets rid of the BS, it gets rid of the crap, and then the real stuff is what's left.
Exactly. It's when the bull market is purging, that's precisely what you want. I mean, if JC was here, he'd probably be saying, I love kicking people when they're down. And it's that same sort of thing, right? Where, again, you're having all this big washout. People are losing a whole bunch of money. And from that, there's a whole opportunity that will arise from that. It's difficult to see right now in the charts. And again, big caveat, we want to see these levels get reclaimed. But ultimately, people getting taken out like they are right now is setting the groundwork for another move in the opposite direction.
Louis, based on the data, who is selling right now? It's all short-term people because we looked earlier. It's not the ETF holders. So
I'm going to give you a crazy stat, and this is going to blow your mind. So Bitcoin is only down like 20%, right? But it's still up
only 20%. Yes, that's right.
But it's up about 500% off the bear market lows.
Right.
Now, if I was going to tell you all the money invested in Bitcoin, what percentage is now underwater from this correction? What percentage would you say, Spencer? Would that be?
What percentage of people are underwater?
Of total money invested in Bitcoin forever.
Wait, I saw
is now underwater.
Okay, hold on. I saw this. I saw you post this yesterday, or you mentioned this yesterday, but I don't remember what you said. But my instinct would say, how many people are underwater? Probably not a lot. If we're only right, if we're talking about everyone all from the lows onward, is that what you're saying?
Yeah, just from total money invested in Bitcoin forever is now underwater. What percentage?
Not a big number. A single digits.
This is gonna blow your mind.
Single digits.
60% of all money ever invested in Bitcoin is now underwater.
That's crazy.
Yeah.
Rick, what'd you say? Rick said, okay. Yeah. How is that even possible?
You think about how that has to and how that is possible. The amount of money that has accumulated above 100,000 when we're in that range is just phenomenal. So 60% of all money ever invested in Bitcoin is now underwater, with it only being down 20%.
Okay, some of that is just law of large numbers, though, right? Naturally, when more people buy at higher prices than when we fall below those higher prices, there's more money that's underwater. So that's a math thing, right? But that number still seems exorbitantly high. I'm not questioning it. I'm just it's almost unbelievable.
It is. It really is. And so I just want to leave you with that cool stat of the weekend. And again, now the majority of all money ever invested in Bitcoin is now underwater. About 2/3 of the entire futures market in crypto has basically been blown up over the last month. And so again, there's some serious losses out there. And so again, I think that's ultimately sending the market up higher for a squeeze in the other direction. And so again, there's a lot of damage. And there's a lot of people losing a significant portion of money in this market right now. So again, that when people are down, as terrible as it sounds, it's an opportunity.
Louis, also, we were talking earlier this year about maybe Bitcoin is not the volatile asset that it used to be. You've got the futures, you've got the ETFs, you got all these things now. Maybe it is really more stable, and it's kind of nice to know that it still got some juice. You know what I mean? Yeah, it can still crash. That's a feature, not a bug of the asset, as far as I'm concerned. And when you were, when we were saying how Bitcoin has been less volatile, I was like, that probably doesn't bode well for future returns if it's going to be a less volatile asset. So it's nice to see that it still can be, because that bodes well.
Yeah,
I think
exactly. Still got some volatility. It's still funny money at the end of the day.
Good. That's good to know. I'm glad to hear it. All right. Louis Sykes, everyone, joining us at 3:00 in the goddamn morning from New Zealand. We appreciate that, Louis. Thank you for joining us. Thank you to David and Kenny and everyone in the chat. We'll be back with the whole crew next week. Let me go look at next week's guest slate real fast. Dean Christians, David Cox, John Salama, Jeff Mackey. Got a big week for you on the morning show. Let's go. We'll get out of here. Everyone have a great weekend. Go make some money. Get outside. Like Louis is going to go for a hike or whatever. Go for a hike and, smell the fresh air. I don't know.
Have a great weekend.
That's my final thoughts. Enjoy.
I can't take no loss. I don't even know what it